I'm Kurt Shimmers. Every day, fortunes are gained and lost in the financial markets. News, trends, and even geopolitical events shape your financial landscape. Join me and my expert guests right now on Traders Nation. Welcome. You are tuned in to Traders Nation. Thanks for making us a part of your day. Don and I have got a packed show. David Scranton's going to be back with us today. We're going to be talking about inflation numbers. They're currently at the highest headline rate since 2012. So we're going to find out what's going on there. Something certainly is up. We're going to be talking about Facebook, right? Who isn't? What the heck happened yesterday? Is it lookout below? Don and I are going to be talking about that and giving you our viewpoint. Plus, data centers and towers are on our stock list, and we got some stocks making a nice reversal. You're not going to want to miss that. Guest stocks and a whole lot more. Stay tuned. We'll be right back.
Traders Nation. Get Pro Online DVD Trader today. Whether you're an experienced trader or just beginning, you'll improve your skills dramatically. Click on the Knowledge Center button to order your copy today. Traders Nation, delivering what you want when you want it. Traders Nation.
Here we go.
Hi, this is Willie Nelson. You're tuned in to Traders Nation.
Welcome back. You are tuned in to Traders Nation. Hey, Don, I want to do a quick mention. Pro Online Trader DVD. Head on over to tradersnation.com today. Click on the More button. You can get a copy of this for $29.95 plus shipping and handling, okay? You can learn about shortened stocks, candlestick charts, patterns, signals, all kinds of good stuff. Because we're going to be definitely talking about this stuff here today. If it sounds Greek to you, you need to get a copy of this. We'll rush it out to you. Priority mail, right, Don? All right. So, Dono, Facebook today. Oh. What?
Well, today's one of the days, if you own Facebook or if you're trading Facebook, you have the blood pressure cuff on because the stock was down.
Yeah.
Actually started last night where they got on the conference call and said that things were slowing.
Sure. And
for obviously we all know the legitimate reasons why. But in any event, the stock was down over $50. It's actually rallied a little bit.
Yeah.
And today it's down about $40. And, of course, all the brokerage firms are out switching around their price targets now. So you see the chart better than I. It's right in front of you. And the stock could actually bounce.
Yeah. So let's take a look at this. So here, bring up your charts on Facebook, folks. Currently trading at $176. 89 million shares exchanging hands. It's huge. It's like 3 times the volume, almost 3 times the volume of its average daily volume. We'll talk about look out below. Look at the chart on this thing. Holy smokes, dropping from 218, Don, down to 174 on huge volume. Like you said, Don, can you imagine being on that conference call and their earnings, and then all of a sudden it got like dead air silent? You know why? Because everybody that was listening to that is invested in it, put everybody on hold, put everyone else on hold, put themselves on hold, and called their broker right away on line 2, Don. Right?
I mean, this is classic.
Yeah.
Where they just did not like the news, and here we go.
Look out.
So, this stock could recover. Facebook is not going away anytime soon.
Right.
So, but it's also impacting NASDAQ today. I noticed the QQQ is down a couple of bucks.
Sure.
And some of the other tech stocks, the Microsofts, Microsoft down a buck, etc. Netflix is actually strong today. And then, of course, we have... Google is down, and Amazon is down right now, $37. Amazon reports after the close today.
I see. All right.
So NASDAQ is weak today.
Okay. So let me give you here's the thing on Facebook, folks. So you had this huge gap down, right? Huge gap down. Hopefully everybody below is wearing their hard hats, Don. What's going to happen? That's right. So what's going to happen here potentially when you see these huge gap downs like that? The stock or the market and investors and traders will come back in once they feel that the dust has settled. And a lot of times we'll see where that gap will try to be filled to the upside. So you have this huge gap down. There you'll see the settlement. People are settling it out, trying to figure out, is it going to drop more? If they feel that it's not going to drop more, then there's this technical analysis. of setting where they're going to feel, okay, this thing may start to fill that gap to the upside. So we may see some recovery on Facebook. That remains to be seen, and certainly we'll be keeping an eye on Facebook, Don. Google, again, Amazon, AMZN, all these, we're going to be keeping an eye on these. Tech stocks, retailers, online retailers, data, et cetera, right, Don?
That is correct.
Yep. Hey, let's go into some positive territory. Some stocks that are looking quite handsomely is in the towers area. Let's talk about AMT Tower here today. AMT is a ticker symbol, currently trading at $144.51. Don, 302,000 shares exchanging hands here today. Bring your charts up on this, folks. Nice reversal off that $140 mark. Don. Trading back above its 200-day moving average. Resistance you're going to find here right at the 146 area. Don, your thoughts?
Well, we've been talking about the towers now for months on end, and these are the companies that carry the traffic. AMT putting in, a nice day, stocks up $1.50. And so, look, these are worldwide companies. Somebody's got to carry the traffic, and these are the companies. And, of course, they're all REITs now, and don't forget, on the horizon, 5G is going to explode, which will require even more towers, many more smaller towers from town to town across the country. So the tower business is a great business, and AMT putting on a nice show today.
Yeah, without a doubt. So once again, AMT, folks, American Tower, Alpha Mary Tango is the phonics or the ticker symbol for that one, okay? CCI, Don, Charlie International, Crown Castle International, another fantastic stock that's been on our list forever, currently trading at $109.62, folks. 467,000 shares exchanging hands here today. Nice reversal here. Beautiful chart on this thing. I love these reversals. Couple days old. Reversed off its $107 mark. Resistance you're going to find here right at $112.50. Don, your thoughts?
Well, Crown Castle. Now, by the way, just a little tidbit. Of these tower companies, CCI, Crown Castle International, Texas-based company, only company on our list here of the tower group that is really only a U.S. company. 100% of their business is domestic U.S. as opposed to a few of the others. So putting in a nice day, good, strong company. It's a REIT, and they pay a dividend.
Okay, so CCI, domestic, majority of its operations domestic, whereas AMT, domestic, but also international on a big scale, right, Don?
That is correct. And don't forget SBAC, putting in a very nice day. Stock's up almost $1.50, $1.40 right now.
Nice.
And then the stock we introduced weeks back, Unit, UNIT. Now, I like this company because this is a 5G company. They're focusing on the 5G. Stock got hit last week, as we all know.
Right.
But keep an eye on it. Another company that pays a dividend.
Yeah. All right. Unit. Go ahead, Don.
UNIT, and it's a REIT.
It sure is. UNIT, Unity Group, currently trading at $17.44, down from what we saw in the lower 20s, Don, but that's okay. Charts on this one, bring your charts up on this, folks. Stock took a hit last week, like Don said, and it seems to be settling at these particular levels, making a base, okay? And it briefly is kissing that 200-day moving average here today, Don. So I'm liking that's staying above its 200-day moving average. A lot of folks in the trade for a living consider that to be bullish. Above that 200-day moving average is bullish. I like the fact that it's staying above that. UNIT. Don, let's go on to data centers. Remaining on our list here today, DLR, Digital Realty Trust, Don, currently trading at $117.14. What's your thoughts on this one?
Well, on the data center stocks, Door is one of the big ones.
Yeah.
And it's trading nicely today. And these are the companies that store the data for the largest companies in the world. And these data centers are exploding around the world. So here we have it. There's a bunch of them. Yeah. COREEGP is the other one we keep an eye on. DLR, and you've got the charts up, and you can see how these stocks are trading.
Yeah, totally.
But this is another business that's exploding worldwide.
Yeah. So DLR up $1 since we spoke about it last. It's been doing this horizontal jig, slightly up yesterday and today. You've got your charts up on, hopefully, DLR. Hey, since you mentioned it, Don, let's go on to EGP, Echo Golf Papa. This is East Group Properties, currently trading at $95.06. 19,000 shares exchanging hands here today. Not a lot, right? It's not a lot, but it does trade average 232,000 shares by the end of the trading session. Bring your charts up on this. Nice reversal off that $92 range. That was several days ago. Resistance on this one, Don, on EGP is going to be at $98 a share, Don.
Well, you got to keep in mind on these real estate investment trusts, they're all REITs now, and they own the property that the towers sit on. So they don't trade like normal stocks. However, they are REITs, and most of these stocks, I think 100% of them, pay a dividend as well.
Yeah, and you know, who doesn't like a good dividend, Don, right?
Well, that's correct.
Yeah, a good one, not a paltry one, a good one. Those are the ones that we like, right? Okay, coming up next, we've got David Scranton. He's going to be with us today. We're going to be talking about inflation numbers and where they're currently at, and where can we expect them to be by the end of this year, and how does it affect us? Inflation. David Scranton coming up next. You are tuned in Traders Nation. We'll be right back.
Hi, I'm Steve Forbes, and you're watching Traders Nation.
You are watching Traders Nation. My pleasure to have back with us David Scranton, once again, CEO and founder of Sound Income Strategies. David, welcome back to Traders Nation. How are you today?
I'm doing great. How are you?
Oh, fantastic. Thanks. All right, so inflation numbers, that's the trick of the game here. They're currently at the highest level since headline rate of 2012, David, and the highest core rate since January of 2017. What helped bring this on?
Well, it's interesting because inflation numbers are looking good, which the Fed is looking at, which they want to look at.
Sure.
And, of course, that signals demand for goods and services. And the Trump administration, of course, wants to lean on the fact that this is going to get them closer to this 4% GDP growth rate.
Right.
And that's good. But the question is it really something that we need to be concerned about? Mm-hmm. Is it something that the Federal Reserve should act on? Should they expedite raising interest rates, or shouldn't they?
Right.
And I think they shouldn't.
Yeah.
First of all, history is filled with examples of the Federal Reserve overreacting to perceived inflation, increasing rates too much, and actually creating a recession.
Right.
And this time, I think it's particularly true, and here's why. Inflation is really much of it's based upon the change in demand for goods and services from one year to the next. Mm-hmm. And we have an increase in demand right now, and a lot of that has to do with the new tax law. Finally, people are starting to see more take-home pay in their paychecks because their withholding taxes went down, and that allows them to spend more on goods and services.
Sure.
Corporations got a windfall this year in profits because they had to pay less to the government. So now their profits are going to be up.
Yep.
And as a result, they feel like, okay, maybe I can make more infrastructure investments, which means that now, it theoretically creates more jobs for people in other places and so on and so forth. But that's a one-time event. That's a one-time kicker. And so this year, you've seen that increase in demand because of that, and then it moves the baseline, but then we go back to the same old ho-hum annual increase of demand from one year to the next.
Right.
And nothing changes.
Yeah. So the Feds, they should have an idea about what we just discussed, what you just said. It's a one-off. It really is. But they're just, it almost seems like they're anxious to raise those rates, and certainly the federal government, this is administration, is against that because we want to get better GDP numbers, we want to get better jobs, we want expansion, we want more of everything, don't we? So it's almost like there's a little dance going on, isn't there?
There is, and of course, the Trump administration takes pride in what's happened with the stock market since Election Day. So they're saying, slow down, slow down. The last thing they want in 2 years is to have a recession. That's going to cause, a Democrat to get pushed back into the office. So they're trying to be careful there. The Federal Reserve, you can't blame them. They're anxious to raise rates because they need to have more ammunition for the next recession. And when somebody is anxious to do something, sometimes it's easier to look at the positive signs and subconsciously overlook the negative, such as the one we're talking about, right? Everyone does this. I mean, most stockbrokers are ethical. They tell people, look, you can make 100% gain on this or you can lose all your money.
Right.
But what people hear is the 100% gain because that's what they want to hear. And they kind of downplay mentally the part about losing all their money.
Right.
And smart people are susceptible to this too because the human mind works that way, right? We make decisions emotionally and we try to find evidence to justify what we want to do. So if the Federal Reserve wants to raise interest rates so they have ammunition for the future, now they're in essence data mining. They're looking for data that supports that. But it doesn't make it any less dangerous in terms of the probability of creating the next recession.
Sure. Now the Feds, as we all know, and certainly have lowered rates down to, zero, and an unprecedented level for a long time. And like you said, the key word here is having that tool back in their belt in order to pull it out again in the future if they need to. So that they have this interest, don't they, of raising those rates minutely at a time throughout now into the coming years, don't they?
Yeah, they do. They do. They have to. They have to do something. Or what happens in the next recession? We go to negative interest rates. And that happened in lots of countries. We haven't done it yet, but we're still susceptible to it. It very well could happen. We're not immune to it.
Right.
And they're trying not to get in that situation where it's overstimulating even more so than we already overstimulated it post the last financial crisis.
Right. All right, so the Federal Reserve Bank is maintaining this hawkish tone. We're talking about that here right now. But many central banks in other parts of the world maintain a more dovish tone, wouldn't you say? And so what can we expect out of the Fed's end? It certainly adds to this conversation. They may raise those rates a little bit more at a time, but what can we expect out of the Feds over a period?
Well, you see, and that to me is the biggest risk right there. And, people try to downplay it. I've had economists, even on my own television show, try to downplay that. But the reality of it is, we are in danger of creating a flat yield curve right now because of what's going on all over Europe and other countries. All that dovishness, which is what we call it in our industry, right?
Yeah.
It's keeping long-term interest rates down because when you have countries like Spain and Italy who arguably are in worse financial shape than us and their interest rates on their long-term bonds are less than ours, it doesn't make sense. It creates a demand for our bonds relative to theirs, which keeps long-term rates down. So if the Fed keeps raising short-term rates and long-term rates stay low, then forget it. At that point, you're going to flatten out the yield curve, which will cause a recession. There was one point, I want to say the week before last, where literally the difference between the interest rate on a 2-year government bond and a 30-year government bond was 1/3 of 1%. In other words, to tie your money up for 28 more years, you're only getting 1/3 of a percent more. That's so ridiculous, isn't it?
Yeah, it's a sliver. It really is a sliver. Interesting. So let's get your economic take between now and the end of the year. And then I also want to know if we continue to move along at this pace, right, this train that we're moving along, buzzing along with good, do you see the Feds raising these rates by the end of the year? What's your thoughts, David?
Yeah, the Fed will raise at least one more time before the end of the year.
Quarter point?
They're already...
Maybe a quarter point?
Yes,
okay.
Absolutely. And they've already done, they've said it, they're going to do it. Unless something dramatic happens, they're going to do it. Now, the issue then becomes, and that itself won't have a huge effect, but you have to think about it this way, and this is a point I made with an economist that was on my show that was a pretty famous economist. He said, well, I'm not worried about a flat yield curve because, it's not because of lack of demand for goods and services. It's flat because the long-term interest rates are being artificially held down, so I'm not worried about it.
Right.
And I said, that's great, but then we got off the air, and I didn't want to make them look bad on the air, so we got off the air, and I said, but have you thought about the fact that all debt today is sold? It's sold to investors. And at the end of the day, if somebody can get as as much interest in a 1-year CD as a 30-year bond that's sold off, they're not going to buy the 30-year bond.
They're not going to do it.
Be there to lend.
They're not going to do it. David, we're out of time. Thanks for your time here today. Yeah. Where can we find you, David? Do you have a website?
Sure. 2 websites. Our company is soundincomestrategies.com.
Yeah.
And my book website is returnonprinciple.com.
Awesome.
And principle ends in PLE.
We're out of time. Stay tuned. We'll be right back. Welcome back. You are tuned in to Traders Nation. Once again, we appreciate David Scranton's time here today on Traders Nation. Always a great interview, Don. Wouldn't you agree with David?
That's right.
Great information.
Right.
He puts it in perspective, these numbers and inflation and how it works, and I really appreciate that because a lot of people don't understand inflation and what inflation can do to your livelihood and your life, Don.
Well, that's true.
Yeah, Don, let's talk about payment processors. We can shotgun a couple of these out. Hit us, Don.
Well, we've got 3 of them that reported today. We've got PayPal, MasterCard, and Visa all reporting somewhat decent earnings.
Yeah.
MasterCharge, by the way, continuing their streak, buying back a lot of shares. But in any event, all 3 stocks are down. PayPal getting beat up here today, down about $1.75. MasterCharge is down almost $6, and Visa's down about 60 cents on the day. But this is a classic sell the news because these are solid companies.
Yeah, and we certainly are, and they're in a solid area. Payment processing, folks, is not going away. In fact, the demand on these companies are going to be greater, not only today but tomorrow. Okay, in the future.
And Square getting beat up a little bit too.
Yes. Yeah. Okay. All right, there you have it. Hey, Don, do you own anything we talked about here today?
No.
No, all right. I don't either, folks, and certainly any stocks we talk about, they're not buy or sell recommendations, okay? We always do appreciate you tuning in to Traders Nation. You can catch Don and I on all the social media sites, whether they're down or not. Everybody have a great day. We'll see you on the next edition of Traders Nation.